A career spanning more than 4 decades is ending.
The Reserve Bank today sent a clear signal to all the major banks.
Philip Lowe joined the RBA in the 1980s. He went on to complete his doctorate at MIT and in 1997 was elevated to the head of economic research, the start of a steady ascent.
Philip William Lowe, Assistant Governor, Financial System Group.
He was first appointed an assistant governor in 2004, made deputy in 2012 and took over the top job from Glenn Stevens in 2016.
There's a new boss at the Reserve Bank and he's worried about your pay packet.
In Mr Lowe's first years as governor, the cash rate was kept unchanged for 29 consecutive meetings, despite stubbornly low inflation, which has since drawn criticism. After eventually delivering several cuts in 2019, it was the pandemic-era policy that came to define Lowe's legacy. The cash rate was slashed to record lows, and Australians were told it wouldn't rise for the foreseeable future.
The condition for a rise in the cash rate will not be met until 2024.
Less than a year later, the board embarked on a series of 12 rate hikes.
Sometimes my comments get interpreted as me having made a promise. In our own way of thinking, it was very much a conditional statement. If the economy evolved as we had expected, we'd keep rates where they were till 24. But the economy didn't evolve as we expected.
You can't forecast safely what interest rates are going to be 2 or 3 quarters ahead, really, let alone 2 or 3 years ahead. And that was a miscalculation.
A miscalculation for which Mr Lowe later apologised.
I'm certainly sorry if people listened to what we'd said and then acted on that.
But maintains it was the right thing to do in the midst of the pandemic emergency.
We were at the time in truly dire circumstances, and we thought the dire circumstances that we faced called for a different approach. And we're explicit about what we thought was the likely path for interest rates. It turned out we were wrong there, but we thought at the time, given the circumstances and the forecast, that was the right thing to do.
Philip Lowe's trajectory took him from regional New South Wales to the centre of Australia's economic decision-making.
I don't know whether I'm the happiest central banker, but I certainly feel the most fortunate.
Having climbed to the top, he was willing to stay there.
If I was asked to continue in the role, I would be honoured to do that, and I would continue.
But that wasn't to be. Mr Lowe became a high-profile figure, recognisable to many Australians during the worst crisis in recent years. But that profile exposed him to public ire over the pain of rising interest rates, which he asserts is a lesser evil than high inflation. His successor, Michele Bullock, has been his deputy through the fastest rate hiking cycle Australia has seen, and takes on a role that will come with more public scrutiny than ever.
Former RBA executive Jonathan Kearns worked at the bank for about 28 years until last year. He served in a range of roles, including heading up the Markets Department, Financial Stability, Analysis and the Economic Research Unit. Dr Kearns worked closely with both Philip Lowe and Michele Bullock and was involved in this year's review of the central bank. He says Mr Lowe's legacy will be one of highs and some lows. Dr Kearns, Philip Lowe will no doubt be remembered by many for his 2021 comment about interest rates not rising until 2024. As someone who worked with him, what do you think his legacy is?
Look, I think Phil's got an amazing legacy. He's had an enormous contribution to the Reserve Bank and through the Reserve Bank, through the Australian economy, over a career that spans 40 years at the RBA. We should also think about the incredible sense of stability and optimism that he provided for the Reserve Bank and so for the economy through the pandemic. That was a very challenging period, relatively early on, or in the middle of his governorship. I think we should think about the very positive contributions that he made as well. There is obviously a lot of focus on the pronouncements that were made about the interest rate remaining low for 3 years and then to 2024. At the time that was initially made was in the depths of the pandemic, where we genuinely all thought that things were looking that dire, that interest rates were going to remain low for a very long time. The question obviously is whether that should have been wound back a little bit earlier, and that's what he will unfortunately be remembered by some.
It is, of course, a question of guidance, though, and this is a very trusted voice that a lot of Australians listen to.
That's right. And if you look at what he said at the time, they always were actually conditional statements. So, we expect the interest rate to remain low until 2024, these sorts of things. But then that got to being reported in the media and by analysts to being an unconditional statement. And I think, the Reserve Bank obviously never went to try to correct those statements and to reinforce that it was actually conditional, not unconditional. At the time, that was, served their benefit of trying to keep interest rates low. And that did work in helping to stimulate the economy, because more people were taking out loans and borrowing, and that was contributing to the spending in the economy, which did help the economy respond and rebound from what was looking like a pretty dire situation.
Interest rates, of course, did start to increase, and former board member Warwick McKibben has criticised Mr Lowe and the bank, saying that they were too slow to begin lifting rates when around the world, including in New Zealand, they started hiking back in 2021. Was the delay a mistake?
I mean, that's hard to say, and there are obviously different opinions there. I was at the Reserve Bank at the time, so there are obviously limits to what I can say. But there certainly was a perspective that Australia was perhaps a bit different, and there hadn't been a pickup in wages growth, and so it was expected that while there would be some increase in inflation coming from energy prices and the COVID disruption, that was temporary and would abate. So I think there was some sense that the inflation story in Australia was different, but certainly there were some people who were suggesting that it wasn't, and that Australia did need to increase interest rates. But I think even if you look at most of the commentators at that time, they weren't suggesting that we would certainly be at 4% interest rates or anything like that. So, at most, I think perhaps monetary policy could have been tightened a little bit sooner, but that wouldn't have changed where we got to now.
The Treasurer and Prime Minister noted on Friday that not all governors had their terms extended. Mm-hmm. How political, though, do you think the call to replace Mr Lowe was?
I think it's certainly got a political element to it. It's played out very publicly in the media and in political circles over recent months. And I think that's actually really unfortunate, both for Phil Lowe personally, who I think has been subject to unfair media attention, having the media camped outside his house following him around. But that treatment of public officials, I think, is actually going to dissuade some people from going into public service in senior roles, and that's a really unfortunate outcome, I think.
Dr Kearns, Michele Bullock is making history as the first woman to head up the bank. She has been Philip Lowe's deputy for the duration of the hiking cycle. Mm-hmm. Do you think we'll see a significant shift in approach?
I wouldn't expect so. And the Reserve Bank has its mandate that they're committed to, which is getting inflation back to between 2 and 3%, whilst being mindful of employment. So I think the advice that Michele is receiving from the Reserve Bank staff will be the same that it would have been going to Phil Lowe. And I think then the considerations by the board, and obviously, Michele is only one person on the board. She obviously will have an influential voice, but there are, lots of views around the board table. So I wouldn't expect that there's going to be any significant change in the approach from the bank or the policy outlook. And what we've seen from markets so far suggests that.
In that case, then, why change the leadership?
So I think, the perception is certainly that it's a response to the commitment to keep interest rates low and the public response and backlash to interest rates having to increase. I think that's unfortunate if that's the reason why, because interest rates have had to increase in countries all around the world. In fact, relative to peer countries, interest rates are actually lower in Australia than they are in countries like New Zealand, Canada, the United States. So I don't think that should be the reason why Phil Lowe has been replaced. Possibly it is, I'm not sure. I think there is a perspective of saying the Reserve Bank review, which was released a few months ago, made suggestions for fairly significant changes to the Reserve Bank. And so there can be a strong case, I think, for saying a new leader will give a validity to those changes and help to solidify those.
In his speech this week, Mr Lowe committed to significant parts of that review that you've mentioned. Ms Bullock obviously inherits that mandate. How do you see that rolling out, I guess?
Look, I think it's absolutely important. The reality is, I think, even with the changes that are recommended in the review, most of the time that's not going to be changing how monetary policy is operating. But for those occasions when you're at a more critical point, where there's some more critical decisions to be made, I think the recommendations that the review makes, which would involve the staff and give them a greater voice for trying to integrate research in the work that the staff are doing more, I think they're important. And also the review essentially gives the board a greater responsibility and a greater voice. And that, I think, will help to question the judgments coming from the bank staff. And hopefully that will help at those critical points to avoid what could otherwise be policy mistakes.
The ANZ Bank issued a note on Friday saying it now thinks the RBA's rate hiking cycle will pause. Will the change in leadership have any impact on that trajectory?
I very much doubt it. I think the objectives are still the same and the information that we have is still the same. I wouldn't imagine that Michele Bullock's views are substantially different from Phil Lowe's. They've been having a lot of discussions, will have influenced one another's views, and they have the same information internally. So I don't expect that that will change things. I think what we're seeing is that some analysts are looking at the information and saying there are greater signs of the economy slowing down, and we're not seeing signs that some parts of inflation are being persistent. We are seeing persistence in services inflation, but goods inflation is coming down at a reasonable rate. And so I think there is some question there. Personally, I believe that interest rates will still need to increase further because there are parts of inflation that are going to be persistent, that are sticky. And without further tightening, I think the risk is that inflation will come down, but it won't come down to that 2 to 3% range. And then we'll be left with higher inflation, which will increase costs later for the economy.
Dr. Kearns, it's been great to get your insights. Thanks so much for your time.
Thank you very much.